Hi once again, James Dwiggins is the Chief Executive Officer for Next Home. In 2018, James was named as a futurist by Riz Media and is ranked number 72 in the Swanepoel Top 200 Most Powerful Leaders. Congratulations and welcome to the show.
I appreciate that. Thank you so much for having me.
What an honor. Tell me about Next Home. What is Next Home?
Yeah, so Next Home is a new real estate franchise. We came onto the scene in January 2015. A little bit of a different model, but we've grown extensively. So, you know, in the past 4 years, we've added 340 locations across 45 states in the U.S. We're about 3,000 top producing agents now across the country. We close about 17,000 transactions annually, so we're really proud of that. But we're a little bit different model because we're focused on less agent count and more about professionalism and doing more business in each local market, raising the bar. Our company's different in that we standardize our brand. We're very particular about how the brand is used in the market. We're partnered with a very prestigious firm out of New York called Pentagram, which helped design our brand identity package. And you know, we're really trying to change the game of real estate by making sure consumers truly understand what realtors provide to the business and raising that bar from the corporate level. So
a lot of that comes down to your brokers on the ground, doesn't it? I mean, your brand is represented every day by the brokers you have, and I think you said, what, over 3,000 of them?
Yeah, 3,000
How do you identify the brokers who will meet that standard that you set?
That's a great question. So, you know, one of the things that's different about our company is we're proud of the fact that we're privately held. And so for us, we're able to make decisions based upon what we feel is in the best interest of, you know, our mission and what we're trying to do in the industry itself. We have about 90 people that inquire with our company on a monthly basis, and we weighed that down to about 10 people that we actually take into the company. And it starts with culture. We spend a lot of time vetting our customer to make sure that they have the same vision as us, that they're looking at the change in the industry, that they're trying to make a positive change with the consumer, and we really kind of figure out if they have the same vision that we do. Once that happens, we do some pretty extensive background check on people. We look at their finances. Are they in a good financial position to run a real estate brokerage? We then talk to people in the market, find a little bit more about them, and go through a process to decide if they're a good fit for our company. And I think one of the things that's unique about us is because we're not beholden to any type of number of addition. We're not publicly traded. We're not held by investors. You know, we can make decisions to bring people into the company that are truly a good fit for the organization and not just a numbers game, which unfortunately our industry is somewhat known for. So,
can you describe for me your perfect, are they franchises or franchisees?
They're franchisees, yeah.
Could you describe for me your ideal franchisee?
Yeah, sure.
In terms of age and...
Yeah. We're not, I mean, so as far as our franchisee, we have about 40% of our members are teams, agent teams that move into opening their own brokerage with our organization. Another 40% are independents. We look at small independent operations, boutique shops around the country that have, you know, 5 to 25 agents in them. Those owners are looking for growth, but they either have to capitalize the business themselves or they're looking for an alternative that's done all of that legwork, which is what we do. I mean, we're a very good package for them to enhance their business and grow it. And so that's about 80% of our business is between those two target customers. Another 20% is existing franchises that, you know, that are with another brand, but that's candidly not typically our client base. They tend to be bigger, larger agent operations, which just isn't our core interest as a company. So that's kind of how we identify, you know, who we bring into the company and what our target niche is. I almost equate us a little bit to like the Starbucks effect, where we're not about one office location with 100 agents or 200 people in it in a city. We might open up 4 or 5 locations in a city where we have an office on every 5 or 6 blocks. So that's how we gain our market share, is through smaller number of offices, or smaller people in offices, but more of them.
We're here at the Inman Conference, of course, a lot of technology and discussion about marketing. Can you just tell me how you think technology has framed the way brokers and agents market themselves?
Yeah, I mean, I've been in this business a long time. I was born into a real estate family.
You don't look it. You look very young.
Yeah, well, 38, but I still have some gray hair. So, you know, I think we are at an interesting time. especially right now with the way that technology is changing our business. And there's two camps here. There's the camp of people that want to remove the realtor from the business. They see the commission that's paid and they want a piece of that and think that that can either be passed down to the consumer, or they provide a mousetrap to provide a service that's discounted. I think that's one group.
Hello and welcome to this week's show. Well, Australia's first integrated, entirely paperless and AI-powered commercial lending platform designed for both brokers and borrowers has been launched. It's called Lenflo, developed by commercial lender Global Capital Commercial. It gives borrowers access to loans by investment banks, private lenders and high net worth investors, as well as banks and non-banks. Andrew West and Bill Salouris joined me from Global Capital. Gentlemen, thank you very much for your time. Bill, I hope I got your name right there, did I?
Yeah, no, that's good. Bill Salouris. Yeah.
Good, excellent. Andrew, Bill, welcome to the show. Can I just ask firstly about the company, Global Capital? It's been around, I believe, for some time, but it'd be fair to say, I think, that a lot of our audience probably are not familiar with the company. Where do you fit into the lending landscape?
Okay, so Global Capital Commercial's specialist commercial finance brokers. So we've been around since 2001. Predominantly, we're a broker-to-broker business. So your typical home loan brokers who perhaps don't have the same level of experience with, or access to funders for a commercial scale would then refer their clients or their deals to Global Capital. We would partner with them, find a solution, and then settle the deal for their clients.
So to be fair to say that while you work with a lot of lenders, and I'll ask you in just a moment how many there are, you're obviously a tool that works at the back end. So most consumers probably wouldn't be too aware of the company. Is that fair comment, Andrew?
I think we're becoming much more popular now, much more well-known now. Probably 30-40% of our business would be direct consumer or business clients, substantially, who would make contact with us, and that's through various methods, typically through the internet, web chat, that sort of thing.
Yeah. Technology's been a wonderful thing. It's opened up so many more opportunities for all of us, and business models like yours as well. Andrew, staying with you just for a moment, because the platform itself works across lots of loan types, commercial development and residential, as I understand it, also self-managed superannuation funds. How many lenders are actually on offer?
We would have around 450 lenders that we would deal with. That'd be Australia-wide, and obviously that's from banks and super funds through to private investor types and small lending firms.
Bill, is it available only to brokers?
Look, it's been, as far as the technology to be a tool, it's there for the brokers to assist them with their clients. There's also a borrower portal, and the borrower portal is really for the application form, to digitise the commercial application form. As far as we know, it's the first truly digitised commercial application form in the world that we've ever seen. So we've never come across it. So that's the part for the borrower, yeah.
I want to talk to you about AI in just a moment, but has AI allowed you to develop that niche?
Well, the commercial application form is something that we've been working on for a while. And when I say there's more moving parts. So, for instance, we could be talking about a shopping centre with 15 tenancies or 50 tenancies. We could be talking about 5 companies, different corporate structures, all interrelated. So the technology can compile all that in one simple process while you're talking to the client. So when you're asking the customer for information, it's only asked once. There's no need to go to and froing, because it brings it all together.
The claim from the company, Bill, staying with you for a moment, the claim from the company is that it's going to boost loan approvals by 500%. That's a bold claim. Well, why will it have so much impact?
What it's doing, that's the AI pricing engine. So what it's doing for us, and we've been using it internally for a while with Andrew and the other business units, is it basically goes through all those lenders. Each one of those lenders has got different products. those pricing for those products are different pricing for, an SMSF phone loan compared to a construction loan, compared to a commercial. They're all different products with different pricing. And in commercial sphere, they're all moving targets. They all price to risk. So they don't say, here's the rate. They just say, oh, we'll price it to risk. What the AI does is it predicts the pricing, and we're at about 98%. So when when Global Capital is issuing a quote, it's pretty much accurate. It's about 98%. It's what it's been proven over the last I think 11 months that it's been in action.
So really, this is about speed, is it? And access to a lot more material?
It's speed. It's consistency of accurate pricing. So we can,
it's also targeting the correct lender as well. So your clients are initially thinking banks, and whereas their proposal may not fit a bank's policy. So by being able to pinpoint the specific funder for those clients, you're targeting someone that's already has an interest, and it's within their policy parameters. Hence, it's become a more efficient process. So you're getting your approvals in a speedier time and more successful.
Because the landscape is changing all the time, isn't it? I mean, the restrictions from lenders and how they structure their business. With 450 lenders, that's got to be a nightmare. No one broker could look after that amount of complexity. Is that another reason why this is so fast?
Well, there's part of that, but that's part of the Global Capital business model. Because it was a broker-to-broker business model, typically they were referring deals that they typically couldn't do. So it's evolved into a machine that has the ability to do the outside the square transactions, and that's been necessity, because that's the sort of transactions. And what the IT has been built to assist exactly that, to make it faster, more efficient, and more consistent. So it can give us the tools to be able to price better for our customers, and allow us to spend more time talking to the customers and getting to know them.
There are, of course, other models available, but how is Lenflo different?
When you say there are other models, I think you'll find that all the models are there for personal loans, a lot for residential loans, but none of them are talking construction, none of them are talking commercial, none of them are talking the more complex moving parts. We know a lot have tried, but as far as we know, and we're talking in the world, no one has done anything like this successfully.
Well, of course, you touched on a point there that I wanted to raise, and that's about the complexity of the commercial lending. It is a lot more complex. It's a lot more involved. That must have been really difficult for you to allow for that. And has that given you the edge, the niche, do you think?
Well, look, we do, because this is, for us, it's what we do every day. So we're used to having the average customer with maybe 2 or 3 companies that are interrelated. We're used to trusts and all these. So, the real challenge was, initially mapping all that out and trying to capture all those moving parts, which, from what we've seen and what we've tested so far, it's handling all those moving parts, and it's doing it successfully.
Andrew, the Banking Royal Commission, its final report has made business really tough for brokers and for lending generally. What do you think is going to be the impact of that going forward, and will that have a negative impact on your business model?
Look, to be fair, I don't think it will have a huge impact on our business model, insofar as there is commercial. It's more geared towards the consumer type lending. We've seen an upsurge in inquiries and in business of late, probably related to that, because a lot of people have assumed that the banks won't lend to them and cannot lend to them. I don't see it as anything. I think there's more opportunity for us with our software as well. It enables us to be responsive and enables us to give clients an indication of where we see their pricing, their funding costs sitting, so it enables them to then make a business decision based on that. But I don't think it's going to have a huge impact on our business, because we're predominantly commercial based. I would say that the home loan brokers, I know that it will have a bigger impact on them, and a lot of those people are concerned. Yeah.
Yeah, it seems to me that lending is becoming a lot more complex, and when we see the rollout of the Royal Commission final report, it's probably going to make it even more difficult, particularly for brokers. Do you see the balance of borrowing moving a lot? In other words, do you think investors are going to be looking more at a commercial portfolio as opposed to a residential portfolio because lending might be a little bit easier?
Look, I think, to be fair, I think it's good business sense to have a mix in your investment portfolio anyway, with commercial properties typically giving you a better return, maybe not the capital appreciation. So I'm not sure whether it will, whether there will be, because of the Royal Commission, that will occur, or whether people will just think more and get better advice. But certainly, commercial properties are making sense. The residential market's hit a downturn regardless, and so I think we'll see more.
A lot of our the customers that we see through that's got larger property portfolios, there's generally a mix between commercial and residential. It's typically never all residential. There's a mix, and I think the savvy investor wants to diversify. If they like property, diversify with some commercial property. Longer leases, good returns, and stable returns.
Because we're hearing from brokers, admittedly these are not necessarily commercial brokers or experienced in commercial lending, they're more residential. They're finding that a lot of their applications are just not, the fall off in application approvals has been quite dramatic. Do you think that's short term, or do you think it will change? Because the banks are sort of, I guess, easing up a little bit, aren't they? We had an indication just last week that one of the major banks was easing up on its lending to investors. Do you think it'll change?
That's an interesting question. They're easing up on investors. I think more residential investors. I don't know. I'm not across, to be fair, the impacts from a residential lending perspective. I think that probably property prices have dropped back a little bit. Returns in a residential space probably have now or yields have increased simply because the rates have dropped a bit. So I don't know whether the Royal Commission or the bank's lending is going to necessarily impact on the level of borrowing. I think it's impacted a bit on.
I'd like to just add in there, like, we've been doing this for a long time, and markets go through cycles, and banks have tightened up before. And they've expanded lending again, and these things go in cycles. We're certainly not expecting low interest rates to last forever. We don't expect contraction of lending to last forever. It's a cycle. So we're in a cycle at the moment where, look, they have tightened up because there wasn't this surge in price growth, which is there. There's got to be a point where banks are in the business of lending money. So in order to increase their business, they've got to lend more money. It's what they're built on.
Makes a lot of sense, Bill. And on that note, I think we'll say farewell, gentlemen. Thank you very much. All the best with what you're doing. I think it's a great tool and it deserves to be very successful. Bill and Andrew, thanks very much for your time.
Thank you very much. It's been a pleasure.
Thank you, Kevin.
Cheers, mate.
Angus, what's the best piece of advice you've been given about running a successful business?
Well, I think the best advice is, one, enjoy what you're doing. I think a lot of people take real estate agency probably too seriously, particularly in the last 6 years that most markets in Australia have been through. Still have a good time, always really have a sense of fun in what you're doing. But really, it's the old adage, return all your calls. Now, if you ask most consumers down here on Cockle Bay, Kevin, the number one complaint is, I had an agent, they never returned my call, either as a buyer or even as a seller. It sounds stupid, but in this day and age, with emails and everyone's got iPhones, iPads, there's no excuse not to have total communication with both the seller and the buyer.
You mentioned there about having fun. It's pretty hard to have fun sometimes when times are tough, isn't it?
Well, I think I've been doing this for a while, like you, Kevin. I think you tend to learn more in a bad market than a boom market. So that's what, if I was a younger agent, I'd be actually turning a negative into a positive. This is, I'm really going to remember the last 6 years because I've learned so much. Because if you've survived the last 6 years, you've got your career set in real estate.
So what are some of the lessons you've learned out of the last 6 years?
Well, dare I say it, I've started 28 years ago. So when I was an agent, now I'm in HQ, when I was an agent it was early 90s, the market was, I think interest rates, what, 16, 17, 18%, and it was just a nightmare. And luckily I had a very good boss at the time, and I think we'll probably talk about that later, and he just said, just keep on doing the same activities. If you keep on doing the same activities, prospecting activities I'm talking about, when the market turns, that's when you get all your ducks in a row, that's when things will really happen for you. It's when the people that were tapped on the shoulder and asked to leave, they're the guys that weren't actually sticking to their old prospecting activities.
Yeah, you're right, you know, you do learn a lot more in a bad market than a good market, because in a good market things just happen, and they happen for probably the wrong reasons, but you learn those disciplines. So do you think coming out of all of that, the lessons we've learned in the last 6 years are going to hold us in good stead for the next maybe 10? Oh,
absolutely, but it's only going to be good, I'm talking if you're a principal, if you've already got your team together. If you don't have your sales team in place and your property management team set, ready to go, then you're probably going to miss the next. You'll be talking about it in 2 or 3 years' time, I've got to get new salesmen in. You'll probably miss half that next cycle. So you've got to get your team established, and you've got to, obviously the big problem is in this industry is retaining them too.
Our industry alone has come under a lot of pressure with the internet, where the agent used to be the gatekeeper of the information. We're no longer in that powerful position. Has that changed the way we have to work as agents?
Well, now it's all about data mining now and really having a CRM. Some of our offices have 20, 30, 40, 50,000 contacts in their database. So a lot of agents, being a salesman, they tend to look forward all the time. Where's the next deal coming from? A lot of the time, the next deal's coming from your PC. It's coming from your laptop, it's coming from your iPad. So you've got to farm, you've got to keep in contact with your existing contacts.
Angus, it's interesting to hear you talk about people's database and, you know, being 20, 30, even 40,000 people. Is it possible to keep in good contact with that number of people?
I'd say absolutely. We are blessed. I think a lot of real estate people don't understand. We are blessed. One of the few industries that people really want to know about. Maybe you're coming down from Brisbane, you hopped in the cab, what do you do, mate? I'm in real estate, oh, I own a house here. There's few industries that really, the only other industry is recruitment, where if you're a recruiter, they'll say, oh, how much am I worth? In real estate, everyone wants to know about the property market. We are blessed. So the good thing is, it's either face-to-face or now you can do it through your databasing. So I think our cut-through rate, certainly the material we send out as a corporate office, we hardly get anyone disengaging, unsubscribing to that, which just proves that Australians just want to eat up. I mean, look how many TV programs are on in this country on property and lifestyle related, property related. It's just, we are blessed. I think a lot of people forget that.
What do you see that the really successful real estate agents are doing that the less successful ones aren't doing?
Well, I've seen a trend probably in the last decade, going back 10 years, the most successful agent was that gregarious life of the party, life of the office, the prankster. They're usually the number 1 or 2 agent. What I've seen now in the last decade, with all online business operating support systems, databasing, it's usually the quiet person in the corner is the number 1 or number 2 agent, because they just go around their day-to-day, their week, their monthly activities. It's almost robotic in the way they conduct themselves. They don't go into work and talk about the football on the weekend and lose all that time. They get to work, they have a plan, and they stick to it.
Yes, you're right. You know, the profile of the real estate agent has changed. It's no longer that slick-talking, smooth operator. It's someone who can build a relationship. That's what we're finding.
Exactly. And when I go out prospecting for new offices, so that's sort of my form of really keeping up to date with sales techniques. When we go to a coffee shop, invariably if the fellow or the person, I should say, knows every second person in that coffee shop, I know they're successful because they have a relationship in their community that's just not shallow. It's just not about flogging your property in 4 or 5 weeks. It's actually about being an important community member and having a very deep relationship that could last in our industry 15, 20 years.